Hello, Sloper. It's Tim Knight here. This week is going to see LinkedIn become the first kind of big social networking IPO. We're going to be very closely watched. One important reason is because of the likes of these guys, Second Market. This is a sort of revolution in the world of finance because non-public companies are able to trade like public companies amongst rich people. And so people have been trading LinkedIn for quite some time. You can see here Facebook's the biggie, and then Twitter, Groupon, LinkedIn. Here's what's worth watching. LinkedIn, which is going to come out, I think, under the symbol LNKD, has been trading pretty close to the IPO price. And if it comes out and a few days later it's kind of wound its way down to, I don't know, 25 or something from the 32 to 35 range, that's going to make for a lot of pissed off rich people. Because the whole notion of using a place like Second Market is to get things, quote, cheap, end quote. Notice I didn't say unquote. There's no such thing. So that's your educational tip of the day. So those guys buying Facebook at a nominal valuation of $100 billion, and I'm not just being facetious, that is the transaction level that some folks have executed at, may take pause if they see LinkedIn get squishy, kind of like Reid Hoffman here, their founder. We'll see what happens. I don't know. Worth watching amidst all the other stuff going on. I read an article just a few days ago about a 26-year-old, not Mark Zuckerberg, but another 26-year-old who just sold his startup for $120 million, I think. Something to do with social gaming, of course. We live in some weird times, folks. The bubble's back, and I don't know if we're starting to see it deflate or not. At the moment, in a tiny way, we're seeing it deflate. The inverted head and shoulders that I had been worried so much about back in the end of April has farted its way back to irrelevancy. I do not think the inverted head and shoulders is a threat to us bears anymore. But the more the bulls try to keep hope up and keep buying into it, the better. Because we just keep selling into those reps. I've been shorting into the strength such that as it has been over the past few weeks. I have 100 short positions now and no longs. I am completely short and I'm into margin, which hasn't been the case since a long, long time. Not radically into margin, but a little bit. So I'm pretty strongly committed to the short side right now. This trend line, by the way, is broken quite plainly today. I think that's an important event. Looking at the NQs, which had a weaker day, their trend line is coming up here. And if that's broken, I think that's just another tally mark in the bear's favor. By the same token, bonds, the source of safety, have been strong. These guys reached a level not seen since December of last year. So if PIMCO and Bill Gross are as short bonds as they claim to be, then probably didn't have a very good day today. Commodities have been weak. Your gas prices at your local pump notwithstanding. If we look at DBC, this broke in a very hearty way its trend line back on May 5th, and it's been edging away from that ever since. Last week is a really golden opportunity for latecomers to short this market on the 10th as it kind of clawed its way back to the underbelly of that trend line. Really superb example of support changing coats into resistance. Seen a lot of that lately, which I like. ERX, the triple bullish energy, again, very, very vulnerable looking here. And looking at the straight up OIH, magnificent head and shoulders here. Shoulder, head, shoulder. Not the most well-defined neckline in the world. I've actually been tracking a couple here. This is the one I'm using right now, 150.36. There have certainly been cleaner head and shoulders in the world, but the significantly lower right shoulder here is very good to see. And a measured move on this, I think, would bring us down to about high 120s, something like that. Now, let's turn to everyone's favorite or most hated metal these days, silver. I mean, a year ago, people really didn't pay much mind to silver. Now silver's kind of become the market. Here's AGQ, which is the ultra silver. This, believe it or not, was approaching $400 just a couple of weeks ago. Now it's about $158. So lost well over 50% of its value. So some poor slob or slobs out there bought right at the tippy top and are still holding on because, well, we can all rationalize ourselves, can't we? But trend line here, broken, retraced, and then falling away from that again. From a price activity level, not a heck of a lot of support. Really the strongest wall of support here, not till 60. So still a long way for this to go before it really finds good, strong support. SLV, we see here this channel, which constituted the confines of the bull market, and was pierced in February. And this portion right here constituted the blow-off. And now we are back into that normal, if you want to call it that, channel. And here again, we have a superb example of the channel being violated. And on Friday, an attempt to re-exit that channel, which was smacked away quite handily, and then more weakness today. So here again, if this were to continue to fall, could very easily see silver going to 25 before it touches that lower channel. As far as equity indexes go, diamonds are rather interesting. I shorted these today, ironically, because they've been relatively strong. I think they're going to play a bit of catch up with the smaller cap items. But here's the diamonds, and this trend line here, which is, I mean, it's right at the cusp of breaking that. Any weakness tomorrow will penetrate that trend line and will set the stage for a move to 122, 123-ish area. IWM, which had a much weaker day than the diamonds, has a target of something like, I don't know, 79 or thereabouts, 80-ish or so in the short term. Violating this trend line would be profoundly good news for the bears. And the cubes, which I am short, as well as the diamonds, had a sloppy inverted head and shoulders, which it has completely failed today. And here again, breaking the low set on April 18, which would ipso facto break this trend line, would be very positive. So in a very subtle way, I think the bulls are, the bears are beginning to take control away from the bulls. Not just a slam dunk, but very subtly. Breaking a trend line like this would make it a lot less subtle and would really change this into a game of just any strength should be sold. The financial ETF XLF, we have a very handsome triangle here whose base was violated today, and we could see a move down to the lower 14s on this one. Last tidbit I've mentioned a few times recently, which is the Kiwi, the New Zealand dollar. This is an exotic forex market, but I think it is well worth watching. The supporting trend line in this commenced, not surprisingly, in early March 2009, and got kind of messy around December and was very plainly violated in February. And since then has created a very nice head and shoulders. I'm going to switch this to an intraday. This is a 120-day hour bars, and you can see much more plainly here the shoulder, head, and shoulder. Just outstanding pattern, just superb pattern right here. They really don't come a lot cleaner than this. Continuing weakness in here, I think, would put us down into the 74 to 75 area. A movement of price in this area, you will see everything get weaker, which is just what I want to see. So, thanks for your attention, and glad you came by, and thanks to the slopers who made it to Las Vegas. I'm sure you had a great time. Wish I was there. See you guys. Bye.